What's up? Oh, fuck. You guys saw my sexy, beautiful eyes. Gotta put the sunglasses back on. Anyways, welcome to another video of my Beeline Holdings analysis for the week of September 5th, 2025. Yeah. Good week today. We got a great rally for the week, about 50% gain. Incredible rally. We've essentially made up the losses from earnings, if you look at it. And we're even on our way to test 2.59, which is the local high. Might be able to test that next week. So we are ending at about $46 million in market cap, still trailing our other competitors. But then again, Beeline is still, the balance sheet is still not looking too good. However, we do have some good news that kind of substantiated this rally. So what is the good news? Well, the first good news is that Beeline has been executing on the letter to shareholders, right? The first one is their initiative to eliminate debt by November 2025. We got a press release about a day ago saying that they've already eliminated the debt of $7 million in obligations. So they essentially, underpromised and over-delivered, if you know what I mean with that saying. If that's the behavior that the C-suite is exhibiting, I think that it's super bullish. Something else, path to cash flow positive, right? They say they're going to do that by January 2026. I bet that they've already done that now or sometimes earlier, just based on the fact that how they've been executing everything and the fact that they've been just buying shares. Insiders are buying a ton of shares. Just look at the reporting from this letter, right? The entirety of the C-suite is buying shares. The COO bought 100,000 shares, right? So these people aren't making like a lot of money. The company is still bleeding cash. And the fact that they're saying that they're going to become cash flow positive and that they're buying shares, it means that they're not getting paid a lot and they're buying shares with their own money, right? So their compensation is essentially wholly relying on the performance of the stock, and they were also reiterated that that the C-suite sits with shareholders, right? So there are some fears, however, on StockTwits that says that what about dilution, right? So that's one of the bigger fears. So if you think about dilution, this is how I think about dilution, right? Dilution, currently the company is approved to dilute up to 100 million shares. I think they've already done about 10 million, so give or take about 80 million left that they can dilute, right? I don't think that they're going to go all in and absolutely destroy shareholder value and dilute all 80 million shares or fulfill the entirety of the amount that they're able to dilute. I think that they're going to do it carefully, and I think that they're going to only do it for necessity. The fact that they're aiming towards profitability, and I think it's coming soon, means that if they are going to dilute, they're going to probably dilute at a favorable price, and they're only going to dilute if there is something that they're going to invest in the company, right? Because even if you dilute, right, the money isn't just going nowhere, right? It's going back into the company, right? For most companies, like mid-cap companies, when they do dilute, they just reinvest the money into the company. So the company still has cash, right? It doesn't mean that the company is losing value as long as the cash is utilized correctly, which based on the shareholder letters, right, the C-suite and the management is already executing most of the plans that they've laid out. So if they are going to dilute for a project that they feel confident in, I think that they should dilute as long as it's not overly exaggerated. So I hope that dissuaded some fears of dilution, right? I think the C-suite aren't dumb people. They're actually pretty smart. If you think about it, they all came from pretty legit, righteous, and good backgrounds. Like Linear Title, it's where the CEO came from. So I would trust in the management, especially at this point, the fact that we rallied 50%. Yeah, so I think that is the major reason we rallied a lot. The fact that the management are buying shares and are telling us, hey, this is what we've done. It kind of instilled a bunch of confidence to new shareholders, to long-term shareholders, and so everybody that's taking a look at Beeline as a potential long-term investment, right? Anyways, moving on. The second reason why we're up is the fact that the Federal Reserve is going to cut interest rates by 25%, 25 basis points. This is a guaranteed cut right now at this point, 88% chance of a 25 basis points cut and 10% chance of a 50 basis point cut. All this because the labor market is going down the drain. It's looking like it's going to get worse before it gets better, and if the labor market goes to shit, it's over, right? Even if inflation is solved but the labor market goes to shit, what happens? Nobody can buy stuff, nobody can get loans, the economy stalls, right? You're not going to have the economy if there's no labor market, right? So I think you have to cut rates. I think the Fed is going to continue to cut rates. We're probably going to go back to quantitative easing, the free money period, if you think about it. Even in the few years after 2008, we have free money. Inflation did not seem to kind of creep up. What was the special formula during that time? Maybe the Fed can dig up what was going on during that time. But anyways, who knows? I think that I think the inflation that happened during COVID is not because of quantitative easing, because we didn't have inflation before that and we were printing money like crazy, right? Anyways, who knows? But I think overall, saving the labor market is good as we continue to cut rates. Hopefully, the real estate market starts to match the returns of the equity market. If you look at the equity markets, it's up like about 6 times what, like 6 to 10 times what real estate has returned. So the real estate market has been lagging a lot, to say the least. So the fact that interest rates are going down, it means that all mortgage companies are gonna have a bull run. Their business are gonna tick up. More people are able to get cheaper loans. More people are able to refinance. More people are able to do a lot of things because interest rates are more favorable. Banks would loan out money more easily. Or yeah, that's about it. Don't want to ramble on too much. What else is there? Yeah, just gonna take a look at the chart again. Beautiful chart this week, right? 50% rally, crazy, bro. Hope this continues to go, continue to rally into Monday. We're at about $46 million in market cap. I hope that they give us some information on the Beeline equity product that's coming out in October. If you look at yeah, they say it's coming out in October, so we don't have that much information on it, but by the sound of it, it's introducing something new into the market at exactly the right time. If you think about it, when the interest rate, the direction of the interest rate decisions are starting to trend downwards, I think that it is an extremely good timing. Anyways, I gotta end the video here. Be sure to like and subscribe, and comment below your questions. I'm gonna, let's see. Yeah. Oh, see, I like this. Had a friend that's usually been on refinance. It was the best dream ever. Whatever. Anyways, I gotta end the video now. So like and subscribe. Thanks. Peace. I got a new haircut, by the way. Anyways.